Good afternoon, everyone. So nice to see everyone all the way back there. This is my third time on the stage here at Money 2020. Seems like the show gets bigger and bigger every year. And I've decided to do something different this time. So I decided that I wasn't going to do a product announcement, even though we did do a cool announcement this morning, but I promised Bill Reddy that PayPal for Marketplaces could be all his announcement, so I wouldn't steal any of his thunder. And I decided against doing a sort of a conversation with some adorable AI bot, because I'm sure that's going to be done somewhere else. I also thought that I wouldn't use any slides, and that I would have no notes on the confidence monitors in front, because what I really want to do is try to, which is almost impossible given the size of this room, have a somewhat intimate conversation between me and all 5,000 of you in terms of kind of where is our industry going, and what's PayPal's role in that. So I first spoke here in 2013, and I was with American Express then, and we had just introduced a product called Bluebird. And I'd be remiss if I didn't congratulate Ken Chenault on this sort of next chapter that he's going into. Nobody could have been a better steward of American Express than Ken. He really embodies the values and culture of that company like no one else, and I know all of us wish him the very best as he goes on to this next chapter. And as Steve Squeri comes in, who I know well, he's going to be a great leader for that company as well as it moves into its next chapter. My time at American Express really opened my eyes to the staggering number of people that still live outside our financial system. Unfortunately, that really hasn't changed over the course of the last several years. All of you, I think, know the statistics, but they are actually amazing when I think about them. Over 2 billion people in the world live outside of the financial services industry as we know it. Here in the United States, we have 70 million people who are outside the financial services industry. And for those people who are outside the industry, as all of you know, it's incredibly difficult to do basic transactions. Even cashing a check, paying a bill, sending money to somebody you love, getting credit is incredibly difficult to do. It's time-consuming. And it's time-consuming because you wait in line for 45 minutes just to do a transaction. And think about somebody who's underserved, who's holding down a full-time job and a part-time job, trying to take care of their kids at home, and waiting in line to make all of these different transactions. It's infinitely less secure than electronic transactions. I read a staggering fact that 12% of the underserved market has been a victim of crime. 12%, because they carry cash with them all the time. And it's incredibly expensive. Last year, Americans spent in the underserved segment of our marketplace $141 billion in interest and fees. $141 billion. Imagine if we could use our collective efforts, technology, to reduce that by 10%. And by the way, our objective should be way more than 10%. But we could return $14 billion back to populations that extremely need that money. That could lift millions of people out of poverty. When I think about the underserved market, it isn't just about low income. Of course, lower income segments of the population have traditionally been underserved. There's a saying, many of you have heard me say, that it's expensive to be poor. And that's very true in the financial services industry. But I think this applies to much more than that. If I look here in the US, the stats that have recently come out are 50% of the population has under $400 of savings. 50%. If you go to the UK, 40% of working families have under 100 pounds of savings. If you wonder why half our population feels unsettled, feels uncertain about the future, is worried about how things are going to evolve, and you wonder about these changes in voting patterns that we've seen, the vote to exit Brexit, I would say look at these numbers to understand that. As we fight against nationalism, as we think about a world where we are interconnected, which I firmly believe is an important role for our industry, we need to address these concerns. And I do feel like financial inclusion, driving towards financial health, is something that we as an industry can not only embrace, but we should lead. And I'll talk about that in a second. When I was here in 2015, I had just started as CEO of PayPal. And I talked about our vision for PayPal, which was democratizing financial services. And that's just another way of saying that managing and moving money should be a right for all citizens and not a privilege for the affluent. That we should enable technology, we should enable our platforms to push forward on that agenda. But the truth of the matter is, several years ago, PayPal was not in a place to help be a leader in that push. And let me explain why. We had two things that we really needed to work on. First of all, we were really a web-based product company, have a checkout experience. We didn't have an open platform, a service-oriented architecture with a multiplicity of services that both consumers and retailers could use to advance their lives in the digital arena. And we really needed to put a ton of investment and time and effort to become a platform company, to really become a neutral third-party platform for partners to access. That's really important because I don't believe that any one company can address the issues in front of us alone. This needs to be a partnership, and the only way that the private sector and the private sector can work together is through open platforms that enable the best of one company's assets to merge with the best of another company's assets, put those together to hyper-serve segments of the market that neither of us could do alone. By the way, that's very hard to do, especially when traditionally PayPal had been seen, this is a word I heard all the time, as a frenemy. Now, frenemy is not a great word, I'll be honest. It's not something I enjoyed hearing all the time. My goal was that PayPal should be an ally with the industry, an ally in the war on cash, an ally in advancing digital payments, an ally in helping entrepreneurs and small businesses get the capabilities they need in the mobile era to compete against the digital giants. And so we went off and created that platform and that suite of services. But the other thing we really needed to do was to address a real fundamental business model issue that we had, which was all about our encouraging consumers to move to lower cost funding mechanisms. And that inherently set up some conflict between us and partners that we wanted to work with. Of course, on the friend side, we were driving tremendous volume, But on the opposite side, people were worried that we were steering customers to instruments that maybe the customer did not want to choose, but that's how our PayPal business model worked. Inside the company, we took a very hard look at this and challenged the fundamental premise of our business model. Because I believe that if you want to build a great, long-term, enduring company, you need to fundamentally be a customer champion. And that means offering consumers choice, full optionality and transparency in the way that they check out, in the way that they manage and move their money. And so we made a fundamental decision to change our business model, to change our philosophy, and become fully transparent, full optionality, full choice for all of our consumers and our merchants. And we worked hard with consumers around the world. We worked hard with many of you in this room to make that happen. In fact, I remember talking to two different heads of consumer in some of the largest banks here in the US, and both of them said to me, I'm not sure you're going to actually be able to pull that off, but if you do, there is no reason why PayPal shouldn't be our largest digital distribution channel. And so we implemented that at the end of last year. And there are two things that have happened. One, as you probably saw in our results, our volumes have accelerated. Last quarter, our volumes grew at 30% to $114 billion in the quarter. Importantly, our mobile transactions increased 54% to $40 billion in the quarter. Customers, because they understand our proposition now, are flocking in record numbers to become members, working with all of you. We put on 8.2 million net new actives last quarter, which was a record for us and up 90% year over year. But the important thing that Choice enabled, along with an open architecture, is for us to be partners with each of you. Over the last 24 months, we've announced partnerships with the leading wireless carriers around the world, the leading technology companies, from Baidu to Google to Ali to Microsoft to Facebook, are all partnering together to use our platform, combined with their platforms, to create differentiated value propositions. We're working with the largest OEMs, including Samsung and Apple. We have a very close partnership, and we started these partnerships with Visa and MasterCard around the globe, with China UnionPay, with Discover, and with leading financial institutions from Chase to Citi to Wells to Bank of America and hundreds of other issuers in the US and around the world. That's important because, as I mentioned, we could not aspire to our ultimate mission, which is to democratize financial services, without being partners. I firmly believe that if we're going to address the issues around financial inclusion, which I think is our obligation as an industry, we need to do it in partnership. We need to work together as an industry. We need to work with policymakers and regulators around the world, with NGOs and academia. As I go around the world and I talk to regulators, I talk to policymakers, it's surprising to me how similar their aspirations are. From conversations we've had with the People's Bank of China to conversations we've had with the CFPB here, there's more similarity than not. They want the best for their citizens. They want to enable financial health. They want to create educational opportunities so that families can give back more to their children than what they grew up with. They want consumers and businesses to understand and clearly understand our value propositions. And it's hard to argue with that as a company or as an industry. So I think we are very in sync with what regulators and policymakers want. But what I think is really important is that business can no longer sit and watch and hope that our governments can solve all of the issues that face our society. I believe that business has to step up. It has to be an active presence. It needs to be a force for good in our world. We need our brands to be much more than making money. They need to be about having a purpose and having a mission. And there are a lot of people who say to me, like, as we think about becoming this force for good, is that in some way in conflict with generating shareholder returns? And I would say absolutely not. I would say with responsibility comes opportunity. I think if we want to be, all of us as an industry, seize this opportunity to create a stronger economy, to create better lives for our citizens around us, for our neighbors, for our families, it is essential that we focus on this because it will create an enduring long-term vision for us. Now, I'm not naive enough to imagine that coming together, even as hard as we may want, will solve all of the issues that I've talked about. But I do think, as some famous philosopher said, you know, a journey of 1,000 miles starts with a couple of steps. And we need to start stepping forward. Now, there have been steps in our industry to address financial health, financial inclusion. People like Ajay Banga from MasterCard have been a role model to me, have been an inspiration. They are leading in many ways. Arun Jaitley, who's the finance minister of India, is a fierce advocate for financial inclusion. And you find that in pieces around our industry. But I think we need to come together to try and make a difference here. Piece-part efforts will not have the same impact of us coming together and making a difference in this incredibly important issue that we can solve. Financial inclusion is a solvable problem. John F. Kennedy inspired our country numerous years ago, decades ago, when he said that we were going to put a person on the moon within a decade. It inspired public and private partnership. It inspired scientists, and that goal was accomplished. I think the Moonshot idea for our industry is that we come together to make a difference in people's financial health. Imagine what that could do if we could use each other's expertise, the assets and platforms that we bring to this, and come together to create a difference. I think that would be incredibly powerful. It would be meaningful for all of us, for our employees, as we talk to our families and our kids. This is something that we can say we were the generation that really ignited this going forward. I just want to personally commit to all of you and to everybody that I will do everything in my power to try and advance this cause. And I promise you that PayPal will be a great partner with all of you in helping to lead this going forward. I want to wish all of you a great conference. Thank you very much. Take care. Bye-bye.